Hello guys, so in this video I am going to talk about new opportunities for investors or founders who are willing to create something new or something challenging in the crypto space. So as you know, in crypto world, things keep rolling really fast, and things protocols like different kind of protocols keep appearing and disappearing every day. So yeah, this is a really fast moving market where every founder or every investor wants to give it a try. So for you guys, I have best opportunities for crypto investors or for crypto founders who are willing or looking to do some great work in the space, or who are looking for some opportunities they are not sure about. So I have a presentation kind of thing for a protocol called Phrase.trade. These guys were building something cross-chain swap for Solana and Sui blockchain. So I will be sharing you that. And if you guys like my videos, if you guys have any doubt, then you can ask in comment section, and I would appreciate those, because I have just started recording videos and sharing my knowledge, as I have uh, years of experience in building production grade blockchain systems, production grade architect, swapping mechanism, all those things. So I have started sharing my knowledge on YouTube. So if you guys appreciate it, or if you guys like it, then you can give me a thumbs up, or you can share with your peer friends who are looking for these kind of contents. Yeah, so without a further ado, let's get started, let's get going. So this, as you can see on the screen, this is a PDF talking about the Phrase.trade's a new Solana cross bridge kind of system, which hasn't built by anybody yet. So this one is really unique because there will be no other protocol like this on the internet yet. So if you try to search Sui to Solana cross chain, then you won't see any better results, because there isn't any. And if you see this simple swap, I don't think it's what they are building, because they are especially focusing on Sui to Solana blockchain. And yeah, so yeah, this is an open thing. You guys can make your own, you can do your own research, because again, so disclaimer, this is not any investment advice or anything like that. This is purely research based. Most of the content have been researched by AI systems like Kimi K2, Google Gemini, and Perplexity, which are better in scrapping internet data. So yeah, I have verified every figure on this slide, and those are genuine. And also, you guys are open to explore or verify the figures you see on this slide, on this presentation. And yeah, so this presentation or this data is a month old. So let's get started. So as you can see, so Solana have around a market cap current, let's check. So Solana have currently, it has a market of 47 billion market cap, and Sui has around, as you can see, around 3.4 billion market cap. But when this was created, these guys had around 80 billion of market cap, more than 80 billion, and this had more than 18 billion Sui. So yeah, due to the conflict and due to uh, global economic situation, these markets are down, but they will be soon up. Yeah. So as you can see, there are around 85 billion of trades happening like total volume of trades happening every month on Solana, and for Sui there is around 17 billion of like total volume of trades happening on Sui. So Solana has multiple best ones are like DYDX, then we have GMGN, we have Phoenix, we have Radium, we have Orca, multiples. And for Sui we have Bluefin, we have Cetus, we have Turbos. Yeah, so all these. And if you see the total cross chain happening between these two giants are really, really less. It's around 0.005%, which is a kind of opportunity, as you can see, because if you are able to capture a like really minute amount of volume share for this cross chain, you will be making a good amount of uh, fees, or good amount of service fees, or money, what we can say. Yeah. So now, why would users will be coming to your platform? So here's the catch. Radium has around 0.25% of swap fees. Orca has around 0.25, 0.2% something, and it keeps these rates keeps changing. Yeah. So for CTES, as you can see, 0.2%. In Jupiter, we have 0.04%. And so these guys, the phrase trade guys, are like will be targeting around 0.01% to 0.5%. So this will be happening because they will be using very fast and very optimized routing engine, which will be able to produce the what we can say the best optimal routes. Yeah. So in current situation, what's happening is there are many things which are broken, where like these platforms are struggling to address, and those are like MEV sandwich attacks. So it 38% of the guys mentions this, they are suffering with MEV attacks. Then around 19% of the guys says like they are struggling with thin liquidity. So these figures are coming from the Twitter and some community posts. Yeah, so I have already verified these figures. You are open to verify and these figures from your end before taking any financial decisions. Yeah. Then 31% mentions that the transactions get failed because of slippage issue, or because of high fees, or tolerance didn't match. So all these kind of things. And 27% says they are paying really high slippage. So it says that the current ecosystem is expensive, predatory, and unreliable. This creates a massive opportunity for user-centric solution. So these guys have figured out 5-point killer stack, and these are as mentioned, as you can see on the screen. The first one is intent-based swapping. So in cross-chain world, we have multiple type of swapping. One is uh, using wormhole. Wormhole is kind, you are wrapping a token from one chain, then you are sending through wormhole, and it is getting minted on the other chain. So that is really quite, so that takes really long and it's really expensive. And then other one, we have CCTP routing, where you convert any token to USDC, then you burn that USDC contract for teleportation, or what we can say for minting on other chain. Then they will give you some attestation message. You take that attestation and you submit on the chain where you want to mint that USDC. And again, there on the on that chain, you will again find the US circles contract, where you will submit the attestation and it will mint the USDC on that chain. So even this path takes around, I believe, can take 20 seconds, and yeah, 20 seconds. Then we have this intent based. So intent based is really fast, and Mayan guys are doing it. And intent based works like simple order book. As you know, in order book, where user sell or want to buy a pair, they mention price, and it gradually shows in order book where the sellers are listed on the top and the buyers are listed from the bottom. So it's like that, where user will publish from what chain they want to burn the assets and on what chain they want to have this asset. So what the counterparty does, they buy the asset on the chain they want to sell, and where this counterparty want to sell is the one where they will be buying it. So this is how their routing engine works. It matches the party to their counterparty to make this trade happen. And intent based cross chain routing works really fine, and it's really fast. Then we have auto routing. Again, you have to build a robust routing system where you will be accumulating all, say, thousands of pool. I'm mentioning thousand of pool because there are millions of pool in, and most of them don't have liquidity. If you filter them by, say, 5,000 USDT worth of TVL, then you will hardly find a, a million pools on Solana-Sui combined. And then we have low variable fees, and because this is also a point, as you have the as you have better routing engine, you will be making some routes where the output value will be more than the current or than the expected one. So in those cases, you can keep the extra output, or you can charge really less. And then it will be the first live Solana to Sui cross chain. So this is the fourth selling point of this protocol, or this project. And the fifth one, it will provide full MEV protection. No sandwich, no front running. So as you know, MEV is maximal extractable value, and this happens when user uses the public pool and when other gets to see like what transaction will be happening. I mean, it's visible when you submit a transaction. It's visible. User can see from what pool you will be buying how much of asset. So they see this and they take advantage of that data. They will be buying from the same pool, disturbing the asset ratio, where you will paying your mentioned slippage. So that's how you will lose your slippage. So they are mentioning that they will protect the users from these things. So yeah, this can be added as a fifth point for selling these things. And for the go-to-market strategy, they have found this one, where, as you can see, user distribution based on wallet, how much users are on what wallet. Again, this data might be stale. There might be little adjustments, but yeah, for Phantom, it's 63 users use Phantom. Then we have Solflare used by 11% of total users. Then Sui wallet is 9%, and then we have OKX 12% and others 5%. So they will be focusing to get their DEX or their system integrated in any top of three wallets, because if you are directly in the wallet, then integration lets user to easily access your system, access your platform, and again you will make more trading fees. So here is the pain want to they are trying to fix. So as you know, 38% of the users, like crypto users on community sites like Telegram and other, they are mentioning that they are uh, hit by MEV sandwich. They are struggling with MEV sandwich. Their set slippages are getting extracted, and if they are keeping the less slippage, their trade isn't happening. So that's the thing. Then we have high slippage. 27% of the users mentioned that they have to keep high slippage to get the trade executed. If they are keeping low slippage, then it's not happening. They are facing denial of service. And then 31 of them are mentioning that their transactions are failing irrespective of what they do. This could be due to congestion of the network, or due to sandwich or front running. This could be anything. and and the last one, as you can see, 19% of them mentions 90% of users mentions that they are facing a thin liquidity. Pools like turbos have, I mean, in thousands. It has around, I believe, more than 8,000 pools, and each pool have hardly $50 of liquidity in it. And there are hardly any pool which have sufficient amount of liquidity for where user can practically use it for swap purpose. So for making a simple swap, you have to um, consider multiple amount of pools for making a simple swap. I mean, it's really complex logic if you want to make this segregated, where in a single swap where you want to extract value from multiple concentrated liquidity pools, then it's really complex logic. So yeah, so it will take little efforts to bring all like thin liquidity pools together to make it feel like a bulky liquidity pool. Yeah, so how they will be tackling this situation is they will be they will be offering MEV protection. Then they will guarantee the execution. Yeah, for cross chain they will be guaranteeing the execution, because without guarantee there are like many of users are afraid of using cross chain, because most of the time it never happens and it fails, and then there are kind of they have to face consequences. And again, they will be using concentrated liquidity pools unlike a normal automated liquidity. So yeah, so concentrated liquidity are better for swapping, or um, for normal swapping or for trading. So yeah, because concentrated liquidity are better for both the providers, liquidity providers, and the users. And then there will be deep liquidity access, because they will be bridging multiple amount of pools from Bluefin, from Cetus, from Turbos, from Momentum on Sui. Then they will be integrating pools from Radium, from Orca, from multiple sources from Solana. And also I exactly don't want to comment on their marketing strategy. They have mentioned they're about to burn around 12k of USD every month, and they are anticipating in bear markets they will be making 25k per month in revenue in the sense as a fees. And in base situation they will be making 120k, and in bull market they will be making 1.28 million in revenue. This will be coming from fees and other things. So they are anticipating that they will be profitable in 8 weeks of launch, with a clear path of 1 million plus monthly revenue. And they are positioning themselves as a specialist, where they like Mayan Finance, Wormhole. These guys are kind of generalist, because yeah, Wormhole is a very general purpose for just passing a message from one blockchain to other blockchain. Mayan Finance is for swapping asset from one blockchain to the other. And they also positioning that they are a blue ocean product. First, they have first mover advantage. Yeah, because they are someone who they are really making a unique kind of product. Then they said that they have verified, they have 100 billion of addressable market, and they will be making UX really better for their users, whether it be for um, MEV protection or failure ratio or extra fees. They will be offering more value to their users. And here is their vision. For now, they want to dominate Solana to Sui cross-chain swap. In future, they want to expand to EVM, Aptos for expanding their business of cross-chain swaps. And in future, they want to become an intent-based liquidity layer for non-EVM and EVM. Yeah, guys, so that was it from my side. If you guys like this insight, or if you guys have any question or doubt, you can again put in the comments. I will be happy to answer those. I will be definitely checking those. And yeah, so again, this was for anyone who are interested in getting involved in crypto markets or crypto products. Like crypto is open and it is public. Yeah, anyone is open to get in and start building products. And if they make better product, yeah, community will definitely support them and will make their effort fruitful. Yeah. With that being said, see you in the next similar kind of video. Till then, keep building, keep exploring. Thank you.